The big hedge funds just reported their holdings at the end of September, and today we'll see the top AI stocks that Cathie Wood just bought, as well as how she picks high-quality AI stocks. AI is the fastest growing industry in the world, and it's said to be adding as much as $50 trillion to the global economy by 2030. And Cathie Wood saw all this coming. She was one of the most ferocious proponents of AI.
We had been talking about artificial intelligence since the firm started in 2014.
She was one of the early investors in Nvidia when the stock was just $5.
We had been very focused on Nvidia as the pure play in this space.
Now, after Cathie made headlines when she dumped Nvidia just before its massive 200% run, she's confident that she can find the next AI leaders.
We're on to the next thing now.
And that's because the investor's perspective switched significantly once ChatGPT became popular. So, it's only right that Cathie Wood owns a small position in ChatGPT's parent, Microsoft. And by small position, I mean around $16 million. But besides Microsoft, Cathie also owns its biggest competitor in the AI space, Google. Cathie's position in Google is more significant, around $29 million at the end of September. Microsoft performed slightly better in 2023 with a year-to-date return around 39% compared to 35% for Google. Moreover, Microsoft stock is much more expensive, with an enterprise value divided by the next 12 months EBITDA around 19 times, while Google only trades around 11 times. But it is pretty easy to invest in these well-established companies. What's more helpful is to understand how seasoned investors like Cathie Wood choose smaller, under-the-radar AI stocks to buy. And from Cathie's perspective, there's one major thing that will separate the long-term winners.
They have proprietary data, and most of the companies you'll see in our portfolios have proprietary data that no one else has that they can use.
And a good example is Recursion Pharmaceuticals, in which Cathie invested $52 million, growing her position 45%. Recursion is a clinical stage company that mixes healthcare with AI. Its drug discovery platform, Recursion OS, is the key for growth, as the company has a lot of biological and chemical data, offering plenty of potential for breakthrough innovation. In fact, investors are so excited that Nvidia invested $50 million in Recursion, and they also plan to collaborate on drug discovery. However, in spite of the announcement, the stock dropped 62% and remains a very high-risk stock. Next, Cathie invested more than $85 million in Meta, increasing her position 43%. Meta's recent pivot from metaverse to AI has been a decisive moment.
Meta is interesting to us. We do like what it is doing, and the fact that Mark Zuckerberg is now prioritizing artificial intelligence as opposed to the metaverse.
As a result, the company saw its free cash flow margin grow, hitting a phenomenal 40% at the end of September, which is some Andrew Huberman morning routine healthy. As a result, the stock performed incredibly well, with a year-to-date return of more than 150%, and the stock is now cheaper than Microsoft and Google, with an enterprise value divided by the next 12 months EBITDA around 9 times. Next, we have Teradyne with $143 million invested, growing 21% from last quarter. And although this is not a pure AI company, it is a crucial pick and shovel for the AI industry. Teradyne is the global leader in cutting-edge test equipment for semiconductors, which has seen a phenomenal growth. The stock is pretty cheap, around 4.5 times enterprise value divided by the next 12 months revenue, but it really struggled in 2023 with a return of only 6%. Still, Cathie keeps her faith in Teradyne as she bought the stock heavily in the last 6 quarters. Next, Cathie bets big on Palantir as she increased her position 38% in the third quarter. That shows that Cathie has tremendous confidence in Palantir stock even after a massive 160% return year to date. What's unique about Palantir is that it has been purposely built as a massive AI platform that can serve both governmental institutions as well as corporate customers. Palantir's platform offers a range of tools that helps companies explore and analyze data like never before. These solutions are highly customized and help organizations gain valuable insights from their data. However, following its recent run, Palantir became pretty expensive, with an enterprise value divided by the next 12 months revenue around 12.5 times. Next, Cathie invested almost $350 million into Roblox, growing her position 28%, Roblox runs a game platform and game creation system where users can create games and other users can play for free. Roblox continually comes up with innovative games, and there are now 65 million active users that use Roblox every day. And although Roblox is not a pure AI play, it is now rolling out generative AI tools for creating games. However, the stock only grew 18% year to date, as investors remain fearful because Roblox can't monetize its users well and the operating losses grew in the last quarters. From a valuation perspective, Roblox is now trading at 5.4 times enterprise value divided by the next 12 months revenue, which is not cheap at all, considering it traded around 4 times just a while back. So it is probably better to wait and see the earnings report, which will be public in just a couple of days. Now, before we get into the top 3 AI stocks that Cathie owns, I need to highlight a crucial piece for all this AI growth to materialize. There is a unique factor that will carry all this innovation, and that's the progress of semiconductors. So, it is only right that Cathie owns $17 million of Taiwan Semiconductor, $27 million of AMD, and still holds a significant $100 million position in Nvidia. Lastly, let's get into the top 3 AI stocks, and we're going to start with a company that isn't a pure AI play, but it will benefit tremendously from the huge amount of data that it owns. Twilio is one of Cathie's favorite stocks, as it ranks 9th in the whole ARK fund, with $417 million invested. Twilio offers communication platform as a service. This company handles everything related to customer service and just introduced its AI-enabled chatbots that can serve customers around the clock.
Trillion business consumer interactions. They can help marketers understand these were the interactions that caused movement towards your company or your product. That is very valuable information that nobody else has.
However, the market doesn't believe in the long-term story just yet, as the stock is flat from the beginning of 2023 because of slow growth, with revenue expected to only grow 9% in 2024. Next, the second position overall in the whole ARK fund is UiPath. Cathie owns more than $800 million of UiPath.
It is using specialized models with its proprietary data to become the robotics process automation company in the world.
Cathie's unwavering confidence in UiPath is surprising. Unfortunately, UiPath is one of the stocks that hasn't really reached its potential yet. In my opinion, it has been lagging with only a 23% return year to date. This is disappointing compared to other AI plays like Palantir, which attained a 150% return. This is mostly because of slower growth amid macroeconomic challenges, in conjunction with still not being GAAP profitable, as we've seen for example with Palantir. However, with an enterprise value divided by the next 12 months revenue below 5 times, UiPath stock is really attractive down here because of the immense market opportunity. Lastly, the biggest AI play for Cathie Wood is obviously Tesla, with more than $1 billion invested at the end of September. ARK invested in Tesla since 2016, and Cathie sees significant upside from the FSD, as Tesla will benefit from the huge amount of data that it owns. Tesla is ferociously working on the FSD, and achieving full self-driving will surely unlock immense potential for the stock. However, the elevated interest rates might spur further price cuts, which is pushing the stock down. I've actually opened a position in Tesla just a week ago around the $210 price. I see the long-term value for Tesla stock and I believe that it will be a winner, but at the same time I do acknowledge the short-term difficulties, as I plan to slowly add on the downside. If you want to compare Cathie's style of investing with a more concentrated portfolio, you can watch this next video. If you feel like you've learned anything of value, or you want to see some more analysis like this one, please hit that like button and subscribe.